Are we on the verge of the biggest altcoin run we've ever seen? The signs are all pointing in the same direction. The SEC just quietly approved a spot ETF that holds a basket of altcoins like Solana and XRP, which could clear the path for individual ETFs for all of them. At the same time, major legislation like the Clarity Act just passed the House, promising to bring clear rules to the space for the first time. In the latest video from Altcoin Daily, Litecoin creator Charlie Lee sits down to talk about where we are in the current crypto bull cycle. He believes we're just getting started and expects a blow-off top to happen, just like in previous cycles. He sees this cycle as being driven by institutional interest and countries adopting crypto. When asked for his Bitcoin price target, Charlie says his base case for this cycle is $150,000, with a wilder bull case hitting $300,000. He feels the major positive news, like the US becoming more crypto-friendly, has already happened and the market is just catching up. It's interesting to hear Charlie Lee's perspective, which feels like a classic sound money argument in a market that's currently obsessed with hype. His push for Litecoin is centered on its utility, stability, and low fees, qualities he calls boring in a good way. The move with MEI Pharma to create a Litecoin treasury is a clear attempt to replicate the success of the Bitcoin treasury strategy. My take is that this is a fascinating test for Litecoin. The crypto world has changed a lot since 2017. While Bitcoin has solidified its digital gold narrative and Ethereum dominates smart contracts, Litecoin is fighting for a narrative that resonates. The challenge is whether a boring, useful payment coin can capture the imagination of investors who are now accustomed to meme coins and advanced Layer 2 ecosystems. The success of this treasury play could be a major turning point, but it's swimming against a strong current of what the market currently values. In the latest video from Crypto Rover, the focus is on a potential Bitcoin breakout that seems to be just around the corner. Bitcoin is currently trading inside a symmetrical triangle, a pattern that often signals a continuation of the previous trend, which in this case was upward. Because of this, the host is holding a $4 million long position on Bitcoin, anticipating a significant price jump once it breaks past its recent highs. The idea of the US government publicly announcing a strategic Bitcoin purchase is certainly exciting, but it remains highly speculative. While the video ties this to a specific report deadline, this isn't a major headline in mainstream financial news, so its immediate impact might not be as explosive as hoped. The more grounded and perhaps more actionable point is the observation about Bitcoin dominance. The drop in dominance is a real and observable trend. Historically, when Bitcoin's price stabilizes after a big run-up, traders often move their profits into Ethereum and other altcoins looking for higher returns. This rotation is a classic crypto market cycle, and the signs pointed out in the video align with this pattern. The real story might be less about a single bombshell government announcement and more about the natural, cyclical flow of capital within the crypto market itself. In the latest video from the Crypto Tips channel, the host talks about why an altcoin season feels very likely. He points to a tweet from Lark Davis showing that Google searches for altcoins have reached a 4-year high, suggesting that regular retail investors are getting interested again. He explains that these investors are usually drawn in by high prices, which is why they often get called dumb money and don't make much profit. He also touches on the struggling US economy, predicting that tariffs and job losses from AI will force the government to introduce a universal basic income, UBI. This could lead to more money printing, similar to the 2020 stimulus checks, which many people use to buy crypto. The host's confidence in an upcoming alt season fueled by retail FOMO is a classic crypto bull market narrative. The data from Google Trends he mentioned is certainly a strong indicator of rising public interest. However, the market feels a bit different this cycle. The idea of dumb money flooding in is complicated by the presence of Bitcoin ETFs, which have brought in a steadier, more institutional flow of cash. This could change how the market behaves compared to past retail-driven manias. While he dismisses the whale selling as a non-event due to its likely OTC nature, the market is also dealing with the confirmed selling of seized coins by the German government and the upcoming Mt. Gox creditor repayments. These are known events that are creating real supply pressure, which might be why the explosive rally he's expecting hasn't quite kicked off yet. It feels like the market is trying to absorb this supply before it can make a decisive move higher. In the latest video from Lark Davis, He's looking at where Ethereum might top out during this market cycle. After a strong run-up, he asks how high ETH could realistically go by the end of 2025. He starts with a classic Fibonacci projection, which points to potential targets around $7,300, $10,000 to $11,000, and a high of $15,000. Because markets tend to have diminishing returns each cycle, he thinks the $10,000 to $11,000 range is a very possible peak. It's interesting how much of the analysis is based on technical patterns from previous cycles. While history often rhymes, the approval of spot Ethereum ETFs in the US feels like a completely new variable. The whole conversation now seems to revolve around when these ETFs will start trading and how much money they'll actually attract. My feeling is that the technical targets Lark lays out, especially the $10,000 to $15,000 range, are heavily dependent on these ETF inflows being strong and sustained. If the demand from institutions is less than what the market expects, we might see the price struggle to break past the lower targets around $7,000 to $8,000. It seems the fundamental story of institutional adoption is about to have a major clash with the historical technical data. In the latest video from Ben Cowan channel, Ben shows how to build a crypto portfolio using a $1,000 example, all grounded in modern portfolio theory. He argues for a data-first approach, setting aside personal opinions. The whole idea is to figure out the best mix of assets by looking at their historical returns and volatility to get the best risk-adjusted performance. Ben's data-driven approach is always a refreshing counterpoint to the hype-filled crypto space. His reliance on historical models like the Sharpe and Sortino ratios provides a solid framework. My view is that while this historical data is extremely useful, the recent approval of spot Ethereum ETFs in the US might be a new factor that these backward-looking models can't fully account for yet. This event could introduce a wave of institutional money into Ethereum, potentially altering its risk and return profile relative to Bitcoin. It could strengthen the case for a slightly higher Ethereum allocation than the historical data suggests moving forward. It feels like we're at a point where an investor might have to blend Ben's historical analysis with a forward-looking view on these new market structures. In the latest video from the Coin Bureau channel, Guy explains the new Clarity Act, a major piece of crypto legislation that just passed the US House of Representatives. For years, the crypto world has been stuck in a confusing gray area, not knowing if the SEC or the CFTC was in charge. The Clarity Act aims to fix that by setting up clear rules. The basic idea is that if a crypto project is centralized, its token is treated as a security and regulated by the SEC. But if the project becomes genuinely decentralized and mature, its token can graduate to become a commodity, falling under the CFTC's watch. The bill sets a sales limit of $75 million over 12 months for new projects as long as they provide disclosures and are on a path to decentralization within 4 years. The act passed the House with a strong 294 to 134 vote, showing support from both parties. Now, it's headed to the Senate, where the real fight begins. Some senators, like Elizabeth Warren, are concerned it has loopholes and doesn't do enough to protect consumers, even calling it the Calamity Act. The industry is pushing to get the bill passed before September, but political delays could push it into 2026. If it passes, it won't just cause a short-term price jump. It's about creating long-term stability. Clear rules would finally allow big institutions and banks to get involved with more confidence, which could lead to major growth and keep crypto innovation inside the US. It's my view that the video does a great job of laying out the stakes for the Clarity Act, also known as FIT 21. The situation on the ground remains tense. While the bill's passage in the House with significant bipartisan support was a massive win for the industry, its fate in the Senate is far from certain. Senate Banking Chairman Sherrod Brown has been publicly critical of the bill, and without his support, it's hard to see a clear path forward. The White House's statement opposing the bill, but stopping short of a veto threat, adds another layer of political complexity. It feels like a high-stakes negotiation is happening behind the scenes. The whole thing seems less about the technical details of the bill now and more about the political maneuvering ahead of the election. Everyone is trying to position themselves as being pro-innovation while also being tough on risk. In the latest video from Crypto's Russ, the host explains a huge development, The SEC has approved the conversion of the Bitwise Crypto Index ETF to a spot-based product. This is a really big deal because this ETF isn't just one coin. It's a basket that includes Bitcoin, Ethereum, XRP, Cardano, Solana, and others. He argues this is basically a green light from the SEC for all these individual altcoins to get their own ETFs down the line, which could cause investors to flock to them. My take is that the host is right to focus on the Bitwise ETF approval as the main story. It feels like a bigger piece of news than the market is giving it credit for. While the Bitcoin and Ethereum ETFs were monumental, they were singular. Approving a spot product that holds a basket of altcoins like XRP, Solana, and Cardano is a massive step. It quietly sets a precedent, suggesting the SEC views this whole group of assets as commodities, not securities. This could effectively clear a major regulatory path for individual ETFs for these coins, something many thought was years away. The idea of an altcoin season gets thrown around a lot, but this regulatory shift provides a real, fundamental reason for why a broad-based altcoin rally could have serious legs this time. It's a structural change in how institutions can access the asset class. In the latest video from the Crypto Banter channel, Alexandro introduces a project called the Innovation Game, TIG, positioning it as a potential successor to Bittenzer, TAO. While many AI projects are just trying to ride the hype, TIG stands out because it doesn't just reward people for running AI models, it rewards them for actually improving the underlying algorithms. The video explains that even tiny improvements in algorithms, like those used for Amazon's delivery routes, can create massive real-world value. This is the market TIG is tapping into, which is projected to add $16 trillion to the global economy by 2030. The comparison to Bittenzer is a powerful narrative for TIG. It immediately gives people a frame of reference for its potential scale. The project's focus on solving real, complex computational problems instead of just creating another DeFi tool is a strong differentiator in the crypto space. The fair launch model is also a big plus, as it avoids the looming sell-offs from early investors that plague many other projects. However, TIG's success hinges entirely on one thing. Can its decentralized network of innovators actually produce a commercially viable algorithmic breakthrough? It's a massive if. The project is betting on the wisdom of the crowd to solve problems that have stumped experts for years. The upcoming emission reduction is a critical catalyst to watch. If the theory holds and sell pressure drops, we'll get a clearer picture of the market's true confidence in TIG's innovative but ambitious vision. In the latest video from Crypto Casey, she kicks things off by pointing out the serious momentum in the crypto market. Bitcoin is marching towards a $150,000 price point, and Ethereum just shot up 20% to over $3,500. She notes that this is just the start of a broader altcoin rally, with coins like XRP, Curve, and even meme coins like Bonk seeing huge gains. What's wild is that this is all happening before the Fed has even started to lower interest rates. It's easy to get swept up in the excitement, especially when the market is green and there's positive legislative news. Casey does a great job of breaking down why these bills feel like such a win for the industry. My own take, however, is that we should watch the political process closely. While these bills did pass out of the House Financial Services Committee, which is a significant step, they still have a long and uncertain journey through the full House and the Senate before becoming law. The political climate is complex, and getting these bills all the way to the finish line won't be simple. The optimism is warranted because it shows serious progress, but the final outcome is still up in the air. In the latest video from DataDash, Paul Sampson lays out a bullish case for the crypto market, projecting that Bitcoin's journey toward $135,000 is still on track for summer 2025. With Bitcoin currently trading around $119,000 after a brief pullback from a recent top of $123,000, he sees the next major target as $135,000. He points to strong institutional interest, referencing a Huddle 15 Capital report that shows over 50,000 Bitcoin were bought by ETFs in the first 2 weeks of July alone. The video's projected scenario for July 2025 feels like a natural extension of the events we're seeing unfold in mid-2024. The success of Bitcoin ETFs since their launch has been a major story. completely changing the flow of institutional money into the space. The video's focus on Ethereum ETFs having a similar effect is right on the money, as that's the next big narrative the market is waiting for. His price target of $135,000 for Bitcoin is definitely bullish, but it lines up with many long-term analyst predictions that see this cycle pushing well past six figures. What's most interesting is his idea of a longer market cycle. Many people are debating whether the old 4-year cycle is broken, and tying it to broader economic cycles like the housing market offers a fresh perspective that explains why this run might have more gas in the tank than previous ones. It makes the idea of a summer lull feel a bit dated. In the latest video from Crypto Wendy, she talks about the recent push by 5 major U.S. banking associations to stop Ripple and Circle from getting banking licenses. These big banks are telling the OCC, the bureau that regulates banks, that these crypto companies are a risk to the whole system. Wendy feels this is a shady move and basically a power grab by the old banking giants who are afraid of new competition. She argues that crypto companies are actually more transparent, with things like proof of reserves, and that the new Genius Act requires them to prove their assets are backed one-to-one. What makes it all the more interesting is that this news came out the same day PNC Bank announced a major partnership with Coinbase. She suggests this is just the established players trying to keep companies like Ripple and Circle from shaking things up. She also mentions that the full story from the banking groups is available on ABA Media. This whole situation really paints a picture of the current tug-of-war in finance. It seems like the big banking groups are trying to shut the door on crypto firms becoming actual banks, using systemic risk as their main reason. But at the same time, individual banks like PNC are striking deals with major crypto platforms like Coinbase. It feels less about genuine concern for the financial system and more about controlling who gets a seat at the table. The established banks appear to be fine with using crypto technology when it serves them, but they draw the line at letting crypto companies compete on their level. It's a classic rules for thee, but not for me scenario playing out in real time. In the latest video from The Modern Investor, the host talks about the renewed energy pulsing through the crypto market. He focuses on an almost unbelievable price prediction for Ethereum that's making waves. According to EMJ Capital founder Eric Jackson, Ethereum could eventually reach a staggering $1.5 million per token, a price target that he says could catch everyone off guard. The host thinks this number is a bit intense, but he does see a path for Ethereum to hit $10,000 or even $15,000 this cycle. It's my view that the $1.5 million price tag for Ethereum is pure headline bait. While it gets people talking, it's so far out there that it's hard to take seriously right now. However, the core idea in the video is spot on. The conversation around Ethereum is changing fast. With the initial approval of ETH ETFs and the ongoing filings for their launch, big money is no longer just looking at it as a tech platform. They're seeing it as a productive asset, something that can generate yield. This shift from digital oil to an internet bond is the real story. We're seeing this play out as major asset managers are lining up to get their products to market. The price itself might not hit $1 million anytime soon, but the change in how institutions value it could absolutely lead to a major repricing in the coming cycle. In the latest video from Alex Becker's channel, he lays out his strategy for what he believes is the start of a massive altcoin season. He argues that for the past 6 months, the smart move was to buy crypto while everyone else was panicking. Now, with Ethereum looking poised to break its all-time high, the real fun begins. Becker's core idea, which he calls the theory of crypto relativity, is that Ethereum's pump will drag the rest of the market up with it. He believes the biggest gains won't be in Bitcoin or Ethereum, predicting maybe a 3-4x on ETH, but in the altcoins that follow its lead. Becker's aggressive style definitely plays to his audience, but his underlying thesis is hard to ignore right now. The recent approval of the spot Ethereum ETFs has undeniably shifted market sentiment and opened the floodgates for institutional capital, lending strong support to his idea that Ethereum's next move is the main event to watch. His focus on the AI narrative is particularly timely. We're seeing AI stocks like NVIDIA dominate the traditional markets, and that hype is clearly spilling over into crypto, giving AI-related coins a powerful and easy-to-understand story for new investors. While the AI and RWA coins are getting a lot of attention, his point about the gaming and NFT sector being overlooked is interesting. Gaming is often seen as the most logical bridge for mass adoption, yet the sector has lagged. If market-wide enthusiasm continues to build, money could easily rotate into these forgotten assets in search of the next big pump. In the latest video from the Crypto Jeb channel, Jeb lays out his case for why Ethereum is on a path to hit $7,500 this bull market, with a potential to reach $10,000 by the end of the decade. He argues that this isn't just wishful thinking. A huge part of his reasoning comes down to stablecoins. With new stablecoin legislation being passed in the U.S. Congress, the growth of stablecoins is set to explode, and most of that activity happens on Ethereum. He points out that Tether alone generates $20 million in daily fees on the network. He believes this fundamental strength, combined with Ethereum's total value locked (TVL) still being below its 2021 peak, gives it plenty of room to grow. Jeb's prediction is ambitious, but he builds a solid argument for it by tying technicals to real-world events. The point about stablecoin legislation is particularly strong. If the U.S. government creates clear rules, it could unleash a wave of institutional money into stablecoins, which would directly benefit Ethereum. The market is also buzzing about the new Ethereum ETFs. While they've been approved, the final S1 forms are still pending. Once those are live and we see the initial inflow numbers, we'll get a much clearer picture of institutional demand. If the demand is anywhere near what we saw for the Bitcoin ETFs earlier this year, a target like $7,500 starts to look much more realistic. His call for a short-term pullback also seems reasonable and is a common sentiment among traders after such a fast run-up.